Good day, everybody, and welcome to our Sustainability and ESG webinar for June 2024. Quite amazing that we are heading towards the end of the financial year for most organisations here in Australia. So it's that last week, everybody's rushing and want expenses approved, making sure everything is ready. So I think it's a good time and a good opportunity for us to talk about reporting, so the role of voluntary and mandatory reporting around sustainability. So welcome to the session, and we hope you find it really informative. So today I'm on my own. Kevin is helping a few clients with some last minute issues before year end, and he'll be back in July. I would like to begin by acknowledging the traditional owners of the land on which we meet today and pay our respects to elders past and present. And we extend that respect to Aboriginal and Torres Strait Islander peoples that are here today. So I'm in Melbourne. I'm on the land of the Voluntary people of the Kulin Nation, and we pay our respects to their elders past and present. Our sustainability webinar series, we've reached the 6th one for the year. And for the rest of the year, the next 6, we were really looking at getting organizations ready for mandatory sustainability reporting. So in July, we're looking at assessing climate-related risks and opportunities, which will have to be disclosed as part of IFRS S2. We'll then in August look at climate-related scenario analysis to consider your organization's climate resilience. So we look at quite a bit of detail and detailed projects that will generate information that will have to be disclosed shortly. Then in September, we focus on processes and policies to manage these climate-related risks. So how do you embed managing these risks and opportunities into your normal enterprise-wide risk management framework and systems and processes? In October, we look at understanding relevant climate-related metrics. We look at climate-related targets in November. And then finally, we end the year with climate-related disclosures in Australia. It might be a good opportunity for me to share with you that over the past 2 weeks, I've actually traveled to Europe. First of all, I started in Oslo, Norway, where I attended the BDO Global Sustainability Conference. And we had representatives from 24 countries where BDO have big offices and sustainability businesses attend that conference. And it was so amazing to compare what we do in Australia and how we help clients in the general environment in Australia with what they've got in their jurisdictions. So we've got people there from BDO in the US, from the UK, most European countries, and they're so far ahead in Europe, the UK, France, etc., Germany. So very fascinating to see what they're doing. The one thing that I've seen is in Europe, they are looking at rolling out European sustainability reporting standards, and there's mandatory reporting required for 31 December 2024. So they are helping clients at the moment getting ready to report at the end of this reporting year for them. Most entities in Europe have a 31 December year end. So 31 December 2024 is a big day in Europe. And they also need assurance of that first set of information that go in the annual report. So a lot of activity, and I was really keen to learn from them on how have you navigate all the aspects basically on the screen to get it ready. Which projects did you run? How did your clients run these projects? And how are they assisting these clients to be ready for 31 December? Now, I know in Australia, we have a little bit of time, but it's not something that you could do at the last minute. So it was fantastic to learn from them there in Oslo. And then last week, I went over to London and we had a BDO Global meeting where we got together the IFRS accounting experts and I'm leading that team in Australia, but we also got together the sustainability reporting experts. And as you know, I lead that team in Australia as well. So it was nice to have that joint meeting. Only 5 of us in the room work across both areas. All the other people are either accounting experts or sustainability experts. So again, fascinating to see how different countries across the world reconcile what we do in financial reports to what we do in sustainability reports. So, you know, I've spent 5 days learning, 3 days in Oslo and 2 days in London, and I'm hoping to share a lot of that learning with you over the next coming webinars. You know, I really spend a lot of time asking people how they do these things, what worked for them, what didn't work. A lot of those European countries actually presented case studies on how they've done climate-related risk assessments, etc. So that was great food for thought, and I'll share with all of you. So please join us for these webinars. It's going to be good quality webinars with the learnings from Global. If I go over to my other role at BDO, and that's looking at IFRS and corporate reporting, you know, for 8 years already, we've been running these webinars every month. Just recently in June, actually while I was away, Kevin Frobers and Dean Arden ran a session on financial instruments, and it was interesting. Part of that was the changes to IFRS 9 and the interpretation of IFRS 9 to deal with power purchase arrangements, virtual power purchase arrangements, and loans that are linked to ESG or sustainability features. So actually what we do in sustainability also has an impact in the accounting world, has an impact in financial reporting. So they looked at that on the 19th of June. And then the green one there in July, we'll talk about understanding the what, the how, and the when of impairment testing. And again, that's a topic that links with sustainability, in that if you have old technology that will have to be replaced to have less carbon emissions potentially in future, what does that mean for the potential impairment of that asset that you currently have in your financial report? So more and more my two worlds are colliding around what we do in financial reporting and what we do in sustainability reporting, and that's actually what we call integrated reporting. The one thing I forgot to say earlier is when I was in London, staff from the International Sustainability Standards Board, who are their head offices in London, they actually joined our conference and did a 2-hour presentation and discussion around IFRS S1 and S2 and what's on their work program going forward. And they said, you know, the 2 big research projects they have at the moment that could potentially lead to IFRS S3 and S4 is one is on biodiversity, the other one is workforce. So that was good, and they gave a bit of an update. A big focus at that International Sustainability Standards Board is actually to assist worldwide with implementation of IFRS S1 and S2. So there's a lot of educational materials which we consult and bring to you through this webinar series as well. And the other thing, and it's a big word for me, and I'm Afrikaans speaking, and so I found the word big and difficult to pronounce, but then a lot of English speaking people also said this is a weird word to say, and the word is interoperability. Big word for me, interoperability. I have to say it slowly. And that is the ISSB is working at how can international sustainability disclosure standards operate together with other standards. So for example, if you're an organization that are forced to comply with European sustainability reporting standards, but you also want to comply with the IFRS S1, S2 issued by the ISSB, how can they work together? What's the interoperability of the two? And they've actually done a comparison of European standards in IFRS S1, S2. It's a 34-page document where they show out differences and additional things you'll have to do moving from the one to the other. And on that note, you would have seen in our sustainability newsletter that went out last week, or if you follow Corporate Reporting Insights, you would have seen that the AASB, in their recent meeting where they've considered the Australian version of IFRS S2 and S1, they've actually gone back on previous thinking. And I'm so happy for that, because in their exposure draft, they said in October that they will not issue IFRS S1 in Australia, and that IFRS S2, they made quite significant changes to it. And I think a lot of people, including BDO, provided feedback and saying, come on back, that's not right. If we comply with Australian standards, we want to automatically be in compliance with global standards. So we don't need this interoperability assessment analysis, it's just more work and effort. And the AASB has taken that on board, and at their meeting said that, they will issue IFRS S1, S2 in Australia, expected to be issued in August. So that's in 6 to 8 weeks' time, and that they will, align. I'm hoping exactly the same as IFRS S1, S2. We're waiting to see that. And they even moved away from the notion that they had to say we have to apply the NGER legislation for carbon accounting, and they're now going back to what IFRS S2 says, and that is greenhouse gas protocol. So to me, that's the best news ever. We don't want two sets of reports in Australia. We're part of a global community, and we are backing IFRS S1 and S2. And so that's fantastic. And we've written an article on that if you want to look on our website, if you've missed the newsletter. So today's agenda, just before year end, we do a little bit of a recap on what is sustainability, why is sustainability important now in Australia, what is sustainability reporting, and I'll touch on voluntary reporting as opposed to mandatory reporting. And then we'll talk about next steps. So develop a practical roadmap for your business based on your needs, your approach, your size. And then I'll end up with the impact on our 2024 and 2025 financial reports. We know for 30 June 24 and 30 June 25, we won't have mandatory sustainability reporting. However, we do know that we cannot ignore the issue. So I'll discuss that as well. The other thing I should flag is last week on Wednesday, the Australian government came out with their sustainability finance roadmap. And in that roadmap, and again, we've written an article on that, in that roadmap last Wednesday, they've reconfirmed that the start date for sustainability reporting in Australia will be for years beginning on or after 1 January 2025. We're actually sitting waiting anxiously to see whether the legislation passes Parliament before the end of this week, which is the expectation. It's already passed one house, but we're waiting for Senate approval, and we're just monitoring. So it's moving ahead, which is fantastic, because we don't want to be that far behind Europe. And they already have reporting. So there's a lot happening, and maybe a good time to give you a bit of a reminder. These webinars, I try and give you an update on everything that's happened in sustainability world within the last month, but also please follow me on LinkedIn. As soon as we become aware of information, we put it on LinkedIn. It's the fastest way out, but you can also register for the monthly corporate reporting insights, which is looking at the accounting side and the sustainability side, or you can register for sustainability news, where we do a bit of a roundup on everything that's happened during a month. The one thing we agreed on when I was in Oslo at the sustainability conference is that sustainability is such a fast developing area. It really is a challenge for everybody to stay on top of everything. And in BDO, and for all of us that focus on sustainability, to be connected and share with each other developments in different countries, is really important to help each other. And we did say, spare a thought for our clients who have so many other responsibilities. They're not just looking at sustainability. They have so many other competing responsibilities. How do they stay up to date? So in BDO Australia, absolutely, it's LinkedIn, it's newsletters, it's webinars to try and keep you informed. And please connect with those. So that's our agenda. So what is sustainability? We've been talking about this for a long time. And you might say, Aletta, why do you go back to this? This webinar that we're doing today is very similar to presentations that I do very regularly, I would say daily, to boards, to audit and risk committees, to CFOs, to finance teams. A lot of people who've not been on maybe the sustainability journey, but they've heard about it, they heard it's coming, and they say, come and put it in perspective for us. You've got 30 minutes, off you go. And this is really the presentation that I would usually do. And, you know, I speed it up and sit in parts based on their needs, but more or less. So I want to go back to the start, because you could potentially, if you like the content and you say, I've been following this for a while, this is repetitive, or I know it, or it puts it in a nice perspective, but maybe internally you want to share this recording with your board or audited risk committee, CFO, finance team to get buy-in. Now, I'm happy to do individual presentations for them as well, face-to-face or online. So please reach out. I'm happy to do that. But if you want to just use the recording, this would be a good one to use for those finance teams. And if you use a recording, you can always stop at some stage and say, Aletta's just said that, how does it apply to us? So you can get some interaction as well, but that's maybe a way to help this, to use this to help you again. So what is sustainability? We often start by saying, remember sustainability and ESG, we use interchangeably at BDO. And I find ESG is actually a nice way to explain what sustainability is, because sustainability can be misunderstood sometimes. You know, people think it's just climate change, etc. So sustainability can be broken into environmental factors, social factors, governance factors. So let's just understand how big this thing is. Yes, in Australia at the moment, mandatory reporting will be around climate change, IFRS S2, but all these other topics are expected to emerge. And as I said, ISSB is working on biodiversity, which is an aspect of environmental, and they're working on workforce, which is kind of employee engagement under social. So topics across, or standards across all these topics are expected. And if you look at the European sustainability reporting standards, they already have 12. You know, also I use this slide to maybe also articulate, you know, what this is going to look like over the next 5 to 10 years, that we will expect sustainability disclosure standards across all these topics. So, you know, we have to get going, deal with climate change, because there will be the next one and the next one and the next one. And also it's a good slide to reiterate to your finance teams and even sustainability people that IFRS S1, the foundation standard, is actually saying your business have to look at all these topics, reach out to stakeholders, do stakeholder engagement, or do a materiality assessment, which is the other word for it, and assess which of these topics is important to your stakeholders, and then you address those in your reporting and in your communication. So just a bit of a starting point. And as we said, often when I speak to boards or people who've not been on this journey, you know, I follow that up. This is how big sustainability is. And then it is, so why would we look at this? Why should you consider it? And it's around access to capital and access to markets and customers and access to people to work in your business. And remember, access to capital is not just equity, or investors giving you money, will continue to give you money, but also access to debt capital, so obtaining financing from banks. So strategically, this is why you would consider it, and you've heard me explain this over many months on why this is the strategic reasons to action. Remember, we had all those topics. It's important that every business consider who are our stakeholders, who are our key stakeholders, what do they expect of our business, let's engage with them. And that's also required by IFRS S1. It's also required by GRI and many frameworks. ESRSs, so stakeholder engagement is actually a logical starting point to understand the need of your users. And then I've often shared with you, this is what BDO Australia has done, or we've done for BDO Australia beginning of 2022. on those exact 24 topics that I started the presentation with. And this is what our partners, our staff, our clients have told us they expect of us and we should focus on. And as I said previously, business ethics, number one, but also they want us to focus on diversity, equity, inclusion, customer satisfaction, client satisfaction, and employee engagement, etc. That green block's what we'll be focusing on, and that's what we recommend all businesses do. If you're looking at this strategically, your stakeholders, what do they want? What's their expectation? So this is, boards always want to know, what do our stakeholders want? How do we meet stakeholder expectations? And this stakeholder engagement process, materiality assessment, is absolutely what boards should be concerned about. All right, so why is sustainability important now? And it's one of two reasons, or maybe a combination. It could be strategic imperative, as I referred to earlier, that it's access to capital markets or people. Yes, strategic for a lot of businesses, especially businesses that are in the supply chain of entities that have a strategic vision in this area, or that have compliance obligations in this area. Strategically, if you want to continue to provide your goods to them, if you're going to continue to work with them, you have to align with their strategic views. So even if compliance and mandatory reporting is never an issue for you, because of your size, strategically, you have to consider this. So strategic reasons is a big consideration, and I lead with that. And then secondly, compliance imperative. You might see that from a compliance perspective, you have to mandatory comply with IFRS S2 in Australia, let's say from 30 June 2026. So yes, your focus is on that. However, when I speak to boards and finance teams, usually they would say, listen, we don't want to do things just for a compliance focus. I mean, yes, we have to do it, and we know we have to do it, but we want to also explore how that could give us a strategic benefit. Because boards are thinking strategically what's best for the business. Yes, compliance, we have to do it, it's important, but what's the strategic benefit we can get out of doing it? Otherwise, we're just doing it as a tick-a-box exercise. And most entities don't want to do a tick-a-box exercise. They want to get real value. So for a lot of our clients, when we meet with them, they actually look at this strategically and compliance together and try and get maximum bang for their efforts and their investment. So that is, a starting point. So what is sustainability reporting, and how does that link to that? So what I've done here is I've said sustainability reporting, there's two big parts here. The one part is that strategic imperative, and strategic imperative might lead to voluntary reporting in a separate sustainability report. It might be voluntary reporting to key stakeholders. It can take very many forms. There's a lot of frameworks. I've mentioned 6 here, maybe the 6 common ones: the United Nations Sustainable Development Goals, that pretty picture, 17 of them. The Global Reporting Initiative, GRI, very important. World Economic Forum, which we've used at BDO. There's the SASB standards, which is actually quite closely linked to IFRS S2 around climate reporting. There's integrated reporting, there's United Nations Global. There's more than 500 globally. These are the common ones in Australia. And then I think a compliance imperative on the right-hand side is the mandatory reporting in the annual report. And at the moment, I've got 2 blank boxes there. We are waiting for IFRS S1, which is expected in August, and IFRS S2, but that will grow to cover all those topics over time. So strategic imperative will usually lead you to some form of voluntary reporting to the stakeholders who want certain types of information, where compliance imperative would push you down a path of mandatory reporting in Australia under IFRS S1 and S2. And then again, we've said earlier, how does this link? And often your board and your CFO and finance teams are quite concerned about how do voluntary reporting and mandatory reporting interact. Because remember, CFOs, finance teams are responsible for the mandatory reporting side. They have to mandatorily prepare financial statements in accordance with IFRS. So if it's mandatory, it's usually on their desk. But how does this voluntary and mandatory interact, and how are we expecting it to interact over time? So this diagram is from a publication of the International Accounting Standards Board and the International Sustainability Standards Board, where they talked about linking sustainability with financial statements and how the two boards work together. Again, interoperability and connectivity, the words they use. So the blue block is the financial statements in accordance with IFRS, which will now be supplemented by sustainability disclosures. So that light blue block is IFRS S2 in Australia initially, which will be mandatory. And those two together will be your general purpose financial report. It will go in the annual report, will go to the ASX, will go to ASIC. The grey block are all the other voluntary disclosures, which you can use any of those 500 frameworks. The one we see a lot is GRI, and it sits quite separate to the annual report usually. And over time, we expect the blue block to get bigger and bigger and bigger because we'll have more mandatory standards, more mandatory reporting, and the grey block to get smaller and smaller and smaller until everything is moved over to the general purpose financial report, let's say in 10 years' time. So that's just how the voluntary and the mandatory link, and there will be a transition, and it will be quite a fast transition from voluntary to mandatory reporting over time. So if we go back to the strategic imperative, and remember that's the voluntary reporting in that separate sustainability report, a lot of frameworks, and this is actually a good reminder for me to talk about GRI. One of the things that the International Sustainability Standards Board said when we were in London and they did the presentation, they look at IFRS S1, S2 that they've issued, and if you add to that GRI disclosures, voluntary GRI disclosures, so mandatory IFRS S1, S2 plus voluntary GRI, it usually gets you very close to European Sustainability Reporting Standards, ESRS, and there's 12 of them. So part of their research on interoperability between IFRS S1, S2, and ESRS, they found that something that will help with that transition and connectivity is GRI. And I know GRI is also widely used in Australia. So if you look at voluntary reporting, you would know that previously BDO has prepared a checklist to help you on this road. Most of my meetings with clients at the moment, we talk about, maybe this is not mandatory for us to do, but we know we're in the supply chain of entities who have to do mandatory reporting, or strategically our customers are asking for it, the bank is asking for it. We want to do something. Where do we start? And we usually say you start with step one, so that is assess. So establish your current state of ESG activities. What do you currently have in place? Another word for it that I've heard at this conference, which I really like, is an ESG health check. So, what's the current state, or what's the current health of ESG initiatives? So do that health check. And then after that, step two is you do that stakeholder engagement or materiality assessment. So yes, I've got my health check, I know what I've got, and now I look at what my stakeholders want. So that's step two, and we do quite a lot of that at the moment. It's really fascinating stuff, meeting with board members, meeting with stakeholders of businesses, understanding their views of what they expect. Very rich information going back to executives and boards. Then in step three, we commit. So yes, this is what we've got. This is what stakeholders want. Is it aligned? Are there gaps? And then in step four, how do we address those gaps? How do we measure this additional information they're looking for? What systems, processes do we need? And then we report. And that report can be a flashy, separate report on the website, or it could be a smaller report going to individual stakeholders. And another question would be, do your stakeholders want this information to come to them with an assurance report associated with it? Because, if you look at financial reporting, if you provide financial information, to stakeholders. Usually there's an audit or assurance report associated with it to provide credible information. So around sustainability, don't we need that assurance as well? And then step 6 is the continuous improvement. So this is incredibly important. You can download this checklist, and please reach out if you would like us to help you with this. So I've got some information here on how do we do that assess health check part, how do we prioritize your different stakeholder groups, and how do we engage with them, how do we collect our findings, how do we commit to identify gaps, how do we measure, and how can we report. But none of this is mandatory. So you could just do step 1 and 2 initially, or do step 1 initially, and you can go at the pace you want to go, but very valuable information. And then you will improve. So again, if you want to download the checklist, please do so, and please reach out if we can help you in any way. So that's voluntary reporting. It's based on your needs. It's based on stakeholder needs. It's aligned usually with your strategy, how you want to grow your business, and the demands on your business. If we move on to compliance imperative, and now we're talking about the mandatory reporting in the annual report, we know that the International Sustainability Standards Board middle last year issued their first 2 standards, IFRS S1 and S2. However, the ISSB cannot mandate jurisdictions to apply these. They can put it out there, they can recommend it, but they can't mandate it. It's for each jurisdiction to decide. And in Australia, we know Treasury has given all indication that they'll adopt this. As I said earlier, the AASB put out an exposure draft in October last year, where they've recommended to not issue IFRS S1 in Australia, to issue IFRS S2, but make quite significant changes to it. And luckily, 2 or 3 weeks ago, they've realized that is actually foolish. And we're waiting for the Australian version of IFRS S1 and S2 to be issued in August. IFRS S1 actually says it's a foundation standard. You have to do stakeholder engagement materiality assessment to identify what's important for your business, and S2 focuses on the first topic, climate. S3, potentially biodiversity. S4, workforce. We know at the beginning of this year, government indicated that they would want a separate sustainability report as part of the annual report, and they would want assurance over it from day one, and that the assurance have to be provided by their financial auditors. And we're still waiting to find out with the final legislation whether it will have to be the same firm who does the financial report audit and the sustainability report audit, or the same actual person, individual. So we're waiting for the legislation. Hopefully we'll find it this week. We know that exposure draft or the draft legislation was in January, and we could provide feedback, which we did. And we know the AASB had their exposure draft in October. We provided feedback. It was a stupid exposure draft. I hate it with a passion. But luckily they've reconsidered. And then we know the final legislation came out on Wednesday, the 27th of March, and they reaffirmed everything that was in the draft legislation, clarified a lot of things. Really great to see how they've taken feedback on board. And the key thing here was to delay the mandatory reporting, saying, if the bill passes through both the Houses of Parliament by December this year, the start date will be 1 January 2025 at the earliest. So whether it passes this month or next month or December, it looks like the start date here will be years beginning on or after 1 January 2025. So the final legislation has been tabled in Parliament. We've heard a few weeks ago it's passed the first House. We're hoping it goes through this week. And then the exposure draft, we know the AASB is considering feedback on the exposure draft, and will finalize the 2 standards in August. And government, when they published their sustainable finance roadmap last week on Wednesday, they confirmed in there that the AASB will issue IFRS S1 and S2 in August. We're expecting the auditing standard ASAE 5000 to be issued before the end of the year, and they reaffirmed the start date of 1 January 2025. Now, the legislation is talking about these thresholds, and this is an important question. It's important to know when you have to do mandatory reporting. So are you in Group 1, Group 2, or Group 3? There's a link there to the policy statement. You have to consider all aspects on the screen. So large entities, there's 3 considerations. If you meet 2 of the 3, you fall into a specific group. You also have to consider the ENGA legislation. So if you're above the publication threshold, you will be Group 1, despite your size. If you're another ENGA reporter, you'll be Group 2. And then asset owners would be, super funds, etc. If they've got more than 5 billion assets under management, they will be Group 2. And these are the dates that we expect mandatory reporting to come in. You can see for Group 2 and Group 3 quite clear. If you've got a 30 June year end, Group 2 will be 30 June 27 and Group 3 30 June 28. This is if you just look at mandatory reporting and if you're not looking at the voluntary aspects. For Group 1, previously they talked about 30 June 2025. Now that's been abandoned. The second column is, if we get legislation through before December this year, which is expected to happen, it will be for years beginning on or after 1 January 2025. So if you've got a 31 December year end, we are looking at 31 December 2025. If you've got a 30 June year end, we're looking at 30 June 2026. And then Group 2 and 3 follow a year and 2 later. So, what will be in those sustainability disclosures? There will be 4 reports, and actually we now also have the consolidated entity report that's come through. But you'll have a financial report, a sustainability report, a director's report, and an audit report. And I should say the 5th one recently came through, a consolidated entity report, where you have to list all the entities that's included in your consolidated group and their tax residency status. So we've got an article on that on our website as well. That came through very recently. So it's a 5th report. Your financial report consists of financials, notes to financials, and director's declaration. And very similarly, the Corps Act will say that your sustainability report consists of climate statements, notes to climate statements, and a director's declaration specifically dealing with that climate statement. And that climate statement, that sustainability report, initially will only have to comply with IFRS S2. So all your other disclosures that you want to disclose around sustainability, all those other voluntary disclosures, therefore, don't have to go in the annual report, won't be subject to assurance, but can sit in a separate report. The question is, what do we call that separate report? Because the sustainability report will deal with IFRS S2 climate disclosures in the annual report. So this separate report can't be a sustainability report as well. Maybe it is supplementary sustainability report. Maybe it is a corporate social responsibility report, a bit of a flashback to the olden days. And maybe it's an ESG report dealing with all the ESG factors. But it can't be a sustainability report. And IFRS S2 is looking at governance, strategy, risk management, and then metrics and targets. This is a very high-level overview of what will be required under IFRS S2. Disclosures around governance, disclosures around strategy, specific disclosures around climate-related risks and opportunities, physical risk, transition risks, effects on the financials, your climate resilience, etc. Risk management, your processes to identify and manage your risk, climate-related scenarios, and how do you integrate all of that in your risk register. And then metrics and targets, looking at carbon footprint, how do we set targets, and will we use carbon credits or not. In my other role at BDO, looking at IFRS accounting standards, we've got a lot of discussions at the moment on how do you account for carbon credits, if you buy it, whether, if you generate it, etc. So quite a bit of developments there as well from a financial reporting perspective. If you look at climate-related risk, we know that under IFRS S2, you have to do a climate risk assessment. And this is what it's expecting you to do. You have to look at what are your physical risks of your business and what are your transition risks across policy, legal, technology, market, and reputation. So what are the climate-related risks? And I just want to flag, it's not just physical risks. Transition risk is actually a big thing for most entities. So for you to try and argue that climate risk is not an issue for my business, it might not be a physical risk for your business, but it could be a transition risk. So just be very careful there. Most organizations, if not every organization, will be impacted by this transition risk. And then what are the climate-related opportunities? So it's not just risks, but also opportunities. So what are all the opportunities we should consider around resource efficiency, energy sources, products and services, markets, resilience? So just flagging that you should think wider than physical risks. And a climate risk methodology that we use is you identify the climate risk, you discuss it with the leadership team. We then assess the control environment to manage those risks and opportunities, consider the impact on a risk register, and finally, prepare a report. And then IFRS S2 actually expects you to link these risks and opportunities that I've discussed previously or listed previously. How does it impact your strategy? How does it impact your risk management? But ultimately, what would be the financial impact on your income statement, your cash flow statement, and your balance sheet? Important to pull it through to financial reports. And that's why CFOs and finance teams should be involved. We know we have to disclose carbon footprint as part of metrics. So this is just what it could look like to show you it's similar to financial statements, and that you need notes on your methodology, your assumptions, your estimates. Now, I want to pull it together. And when I speak to sustainability people at businesses or speak to finance people, the one thing that usually gets most reaction is when I share the practical roadmap. I think the feedback on these roadmaps have been amazing, and I think the reason has been it's really a visual summary on one page of what this could look like for different organizations. So what I've done here is I've got a best practice roadmap for those entities that look at sustainability with a strategic imperative. So they want to do it as soon as possible. Strategically, it's important. And then group 1 entities. So for mandatorily, they have to do it fairly fast. Your green blocks here indicate when it becomes mandatory. So scope 1 and 2 become mandatory 30 June 26. Scope 3 become mandatory 30 June 27. And then the other IFRS 2 disclosures become mandatory 30 June 26 for group 1 entities. And strategic focus, it's never mandatory, but, it's continuous improvement, responding to stakeholder needs. So you can see here, we try and break it down. If you were running projects, we recommend 3 project streams, a carbon footprint stream, the other climate-related disclosure stream, and a strategic stream. And if you do carbon footprint, we know we have to do boundary setting and basis of preparation, etc. And we do it over time, and you start with scope 1 and 2 and then scope 3. For climate-related disclosures, we've broken it down into building blocks. What are the building blocks? That's the little dots. What are the building blocks to get to IFRS S2 compliance? And then in stream 3, if you look at this strategically, I've shown you earlier that activation roadmap. What steps do you do first? You do the assess or the health check, the prioritize, the commit, and then you look at the measure and report. And we give you an idea on how you can roll it out over time. So for 30 June 2024, it's gone, right? We've got a few days left, and therefore I've got grey blocks there. If you haven't done anything, nothing you can do now. Let's deal with 30 June 25 in the next 12 months. But what you can see in the 30 June 2024 block is to look at the TCFD recommendations and at least bring in some disclosures around governance and strategy. And conduct an IFRS S2 gap analysis as soon as possible to at least inform the extent of the work you need in 30 June 2025 financial year. If you're a Group 2 entity, you can see we've got a bit more time, so I've added another column. You can see for 30 June 24, you still have to look at the TCFD disclosures. Can't get away from that. But at least your other work you can now spread over the next 2 years. And we give you an idea on how we think you can spread it over 2 years. And then if you're a Group 3 entity, again, you have to do your TCFD disclosures in 30 June 24 and 25, but the other work you could delay if you so wish. I did put in for 30 June 25, look at the strategic assessment and stakeholder engagement, because I think it's good to understand strategically you know, what this means for you. But again, this is just best practice roadmaps on how you can roll it out. And remember, the green blocks are the mandatory blocks, and when you have to do mandatory reporting. So I'm trying to overlay compliance and strategic imperative over a time period and how organizations can tackle this. So this is high level. We can work with you to break it down into a more specific roadmap. I want to come back to the impact on FY24 and FY25 financial reports in the last few minutes of the webinar. And that is just to remind you that ASIC and their chair, Joe Longo, made a presentation on the 22nd of April where he was talking about, you know, mandatory climate disclosures and why one should start preparing early. There's a lot of projects that you can see on the roadmaps that you have to conduct in order to generate the information that's required for reporting. And those projects take time. But they've also, you know, reiterated that we know that the AASB is working on finalising the Australian standards, and it will be based on the ISSBs. I'm hoping it will be exactly the same. We know a lot of organisations already look at TCFD recommendations to get ready, and that's a good thing to do because IFRS S1 and S2 has been built on the same framework as the TCFD recommendations. It's maybe just refining it a bit. So they're saying voluntary TCFD disclosures will put you in a good place to get ready. They've also done some research, and they've said nearly 75% of the ASX 200 are already complying with the TCFD recommendations voluntarily. So if you are in their supply chain, you know, what does that mean for you? And also making the point, you know, it's not a good idea, or it's not an option to put this off until later because you need quite significant projects to be conducted to be ready. And then ASIC always comes out with their focus areas. So it's financial reporting focus areas for 30 June 2024. They've announced their focus areas very early this year, I think in middle May. And they're one of the focus areas for ASICs when they review financial reports being lodged with them is to look at climate-related risks. So they were saying directors need to be aware of the impending developments in climate reporting. And the first tier of companies is proposed to report for financial years commencing from 1 January 2025. Therefore, directors and entities should start preparing and putting into place the necessary governance arrangements. They should consider what capabilities and data requirements they may need. And they should disclose what they're thinking and what they're doing as part of the TCFD recommendations. And then if we go back to the TCFD, we've talked about this a lot, but the TCFD, similar to IFRS 1 and S2, it's got 4 pillars across governance, strategy, risk management, metrics, and targets. I'm not saying comply with all of them 30 June 2024, but at least focus on governance as an absolute minimum and potentially strategy. I would say governance and strategy. And then next year, add risk management, add metrics and targets, and then the next year you add the missing bits to comply with IFRS S2. So what we've done at BDO is we've prepared a TCFD checklist with some suggestions on things to consider. And we also have free TCFD training, which is online training that you can do to give you background on governance, strategy, risk management, metrics, and targets. And finally, how BDO can help. I want to reiterate that at BDO, we don't want to be everything for everybody across sustainability. We want to focus and we want to stay core to our key skills. And therefore, we can help you around carbon accounting. And we've done these carbon accounting masterclasses and webinars. We can help you with sustainability reporting, whether it's voluntary or mandatory. Thirdly, we can help you with sustainability strategy. So you can see those three services are advisory services, and they line up with the roadmap that I've shown you. Carbon accounting project stream 1, sustainability reporting project stream 2, and strategy and decarbonisation strategy project stream 3. And then if you've done all of those advisory aspects, of course, our auditors, our audit and assurance practitioners can help you with sustainability assurance. And if you want to know a bit more about our services, these are services around carbon accounting, sustainability reporting, and strategy and assurance. The green blocks are done by our advisory teams and assurance done by our auditors and our audit service line. I've got some contacts for you if you want to reach out around carbon accounting, sustainability reporting, sustainability strategy, or sustainability assurance. And we are across the country, Melbourne, Sydney, Brisbane, Perth, and Adelaide. As I've said earlier, please subscribe for Corporate Reporting Insights if you want to look at the accounting angle and the sustainability angle, or subscribe for Sustainability Insights if you're only interested in the sustainability aspects. And we've got free online training, and we actually have a learning hub where we put all the information we gather globally in one place, and we organize it: carbon accounting, sustainability reporting, and strategy, similar buckets. So I would like to say thank you very much for joining me for this webinar. I hope it's given you good food for thought to think about sustainability reporting, whether it's voluntary or mandatory, and especially how the two interact. Please reach out if you want me to discuss it with you and your business in greater detail. Very happy to do that. I would like to say happy end of financial year, and I'll speak to you again in July. Thank you very much for joining me today.